There's John Kenny, hand right up. Awesome. Well, I like money too. And one of the reasons I created this course, I actually created it for the Vancouver Real Estate Board in the last 2 years, was because when I started as an agent about 12 years ago, one of the things that really shocked me was that several agents would come to see me to help them with their finances. There was a lot of distress by agents. And the thing that really hit me was that these were the agents in the top 10 and 20%. These were not the lower tier agents. So I recognized immediately that there was a bit of a problem in our industry in terms of knowledge on the financial side and the business management side of our business. Because it's not really just about being a salesperson, it's about building a business. So I kind of put together a whole bunch of ideas and concepts in this presentation that relate to accounting, bookkeeping, tax, leverage, investing, just to bring a whole picture together from the viewpoint of our world as agents. So hopefully you gain some knowledge today that you can take and put into practice. So in terms of goals that I have for today, I want to educate realtors on the financial side of real estate. I want to encourage realtors to take advantage of opportunities in the market because we are one of the only professions that's allowed to do insider trading. And unfortunately, so many realtors don't take advantage of the deals that they see right in front of them. I want to elevate the profession because I think the public views many of us as used car salesmen, and Keller Williams does a great job of elevating our profession, but we've got to keep doing more to be better educated, to give confidence to the public with our knowledge as well. I want to teach realtors to build net worth and understand the structure that they should have in place. And I want to give back to an industry that's been so abundant and given me so much for my family and for myself. Now, for those of you who don't know, I started my career originally as a CPA. I moved from Montreal to Vancouver, and I worked for a large firm, Ernst & Young, as a US tax specialist. But it didn't take very long before my entrepreneurial spirit just was restless. I didn't want to really study the tax code. I wanted to be in the game of business instead of record keeping for other people's success, because of course all of our clients were entrepreneurs and professionals. And so I started with my first business, which was a maternity clothing business. At the time, there were quite a few senior women getting pregnant. We had the first female partner at Ernst & Young that was pregnant. We had senior managers, and what was available was just atrocious, quite frankly, for women to wear in business. And so we launched initially selling out of hotels on weekends, another accountant and I. Then we had a retail store in Kitsilano and then one in West Vancouver. We were very early on the internet, selling in 1995 all over the world. And we had ultimately a warehouse in Blaine, Washington, where we were dispatching the clothing. But one of the things that became very difficult in that business was that it was a niche market. We had a non-recurring customer. We had a lot of debt, a lot of inventory. So, you know, the more we grew, the more inventory we needed, the more cash constrained that I became. And so at a very young age, I was about $200,000 in debt. But I knew when I started that business that I was young enough that I would be able to recover. And so it was real estate that got me out of that debt because I saw an infomercial in around the year 2000, 2001 about buying real estate with no money down. And I started to take the training. As much as I was over leveraged, I found like some cash and I got more credit cards and raised my limits and I got this expensive training. But it gave me the ability to see a way out. Because as an accountant, I didn't want to lose my designation by filing bankruptcy, and I wanted to do the right thing and exit the business gracefully, clearing off my creditors. And fortunately, I acquired about 3 properties in a fairly short period of time. The first one being, with my mother's help, co-signing for 1% on my first house, which was a foreclosure. And the equity in those properties helped me to clear out all my debts with my creditors, and I maintained that line of credit from that business because one day sitting in my shop, I realized if I just change the name of the company, the bank's not going to call my line of credit. I just have to keep servicing the interest on it. And so that's what I did. Ultimately paid it down, kept that line of credit alive, and I still use it today. I still keep that company. So my maternity business was called Maternal Instinct Wear, and I changed the name to High Performance Investments, which I still use today. So I started investing after taking that training in 2001 with the guidance of the training that I learned. I became a mentor ultimately for the same company from the year 2009 to 2018. And I traveled almost every week or 2 weeks to Edmonton, Red Deer, Calgary, Saskatchewan. And I would just work with people one-on-one for 3 to 4 days, helping them to build a portfolio, to figure out how to create a better future for themselves and build their net worth. But I also got my license in 2012. Now, I passed my real estate license in 1995, but I wasn't mentally ready for being a salesperson yet. I was still accountant brain. And then in 2004, I passed it again, but I was talked out of becoming an agent because I was told you can't be an investor and an agent. There's too much disclosure. And unfortunately, I listened. And so by 2011, I just decided, that's it. I'm just going to do it. I'm going to figure it out. And I just had to pass the exam. I didn't have to redo anything. And so that's when I got my license. So combined with the mentoring, I actually got a little too busy as a realtor and couldn't continue mentoring at a certain point. So I let it go at a certain time. I was also teaching creative financing in Toronto and Calgary, which was quite exciting because I got to learn a lot of creative financing techniques from the other trainer, which I use today. And, we'll continue to teach some of those probably to realtors as well. I mentored over 200 people during the time that I was mentoring. And as I said, I became an agent in 2011, at the end of 2011, and built a niche business right from there with investors, because over all those years, I was networking with investors. I was in those circles. So it was just a natural fit to move into that arena. And grew a team, and we specialize in the financial side of real estate. So living in a market like where we live, anybody who owns any kind of house or townhouse has quite a bit of equity that they can easily pull to invest in real estate. So I feel it's a pretty easy market to be an investment realtor in because everybody's sold on real estate here. And with 19,000 realtors between the 3 boards, the nice thing is we don't have much competition because there are very few realtors who really understand investing. So I thought I would just show you my team. Got tremendous professionals on the team who are licensed. And then also our admin, we've got Sophie, who's our social media manager, Jury, who's not here, he's in the Philippines right now, our graphics person who put together this remarkable presentation in terms of visual. Chris, our videographer, Ladell, our property manager, and Jody, sort of an occasional assistant to the team. Now, when I started, as I mentioned, realtors started to come to me for financial help fairly quickly. And as I mentioned, I also noticed that it wasn't even the lower producing agents that were having the struggles. And that's what sort of led me to try and bring in accountants to the brokerage. At the time, Trevor Street was the only person with a personal real estate corporation. Many of the realtors didn't understand the benefits of that, which I'm going to cover today. And tried to basically get the bookkeeping and the accounting all at the forefront for realtors, because I know it's not usually realtors' favorite topics. And I was quite shocked. Some of my colleagues, they didn't even look at their tax returns until the end of the year. They didn't look at their monthly accounting or bookkeeping at all. So they had no way of gauging where their business was going. And in a market like what we're in right now, with a shift that's so sudden, you have to be so on top of your monthly financials just to make your decisions as to where you're going to cut, where you're going to increase. And, just on our team alone, just hearing from our coaches and from Gary Keller about what was coming, we started cutting back in October, November very drastically to make sure that we were well positioned for what could be a difficult time where we have to work 30% harder just to maintain the same sales volume. Now, there's a picture, and this picture is my Rich Dad. How many of you have read Rich Dad, Poor Dad? Quite a few of you. Okay, so I have my own real life Rich Dad, Frederick, who's almost 92 years old now. And I was lucky enough to meet him in 2002 when I was calling, because I was taking these real estate courses that said to call and ask for vendor financing. So in my mind, based upon what I learned in the classes, vendor financing was when a seller carries part of the price for you. You get a bank mortgage and you get a second from the seller. But when I asked him, he said he would carry a full first mortgage. So I was in shock that this was possible, but he owned half the building in Hammond in Maple Ridge that he had built. And he had built it in the 90s, the market had turned, and he still had all these condos. So I went to my mother, she put up the down payment. It was my very first joint venture. We split the positive cash flow, And he carried that first mortgage. And if you can believe it, at that time, I think I paid about $85,000 for that one-bedroom condo in Maple Ridge. Unfortunately, I sold that one. That was a mistake, which the reason I sold is because he and I ultimately got out of the building. But when he realized I was an accountant, he basically wanted me to be the treasurer on the Strata Council. He was the secretary. Together, we controlled the building. And just like in the book, Rich Dad, Poor Dad, the rest of the building hated him. They hated me by default. But we managed to, control the building. And then when the time was right and we could both get out fully, we did. And he became a mentor from that point forward. He became a lender. And I go to him for advice on most things anyway. But unfortunately, he had a stroke in October, and he's been in and out of care homes and the hospital since that time, and experiencing some dementia, which is extremely difficult when you're used to someone being your rock and your anchor that you can go to for anything. And now from one minute to the next, he's in and out of being on top of things and understanding or remembering things. So, but many lessons that he's taught me over 20 years, I maintain. He always taught me to delay gratification and never allow yourself to be backed into a corner. In 1958, he became a realtor just by fluke. He came to Canada as a pastry chef, and he was the top agent in 10 offices. And within 5 years, he got into building and development, and he built his first building in Marpole in 1963, which he lived in the penthouse for 20 years, rent-free, while the tenants paid down the mortgage. And then he built some other buildings, and he took that cash and he put it into multifamily, and he was one of the first people in Vancouver to build condos. And I've learned from him basically to hold on to things for 40 to 50 years, and you'll be wealthy beyond what you can imagine. So today I ask you, are you a business person or are you a salesperson? How many of you consider yourselves to be business people? Most of you. How many of you think you're salespeople? Some of you. So being a business person, as I mentioned, involves planning cash flow and understanding the numbers. Have you adapted to the new reality of the shift? So running a business means you've got to understand that accounting is a priority, and your profit and loss at all times, you have to have a relative handle on it. Our business as realtors is cyclical, and as a result of that, we have periods with large cash influxes and we have periods of drought, and we have to plan that out. And it's very important that you have lines of credit and ample credit card space to do so. And one of the things I always drill into the people on my team is always make sure, again, back to Fred's lesson, never allow yourself to be backed into a corner. So make sure you've got lots of credit for the times you're going to need it. Don't abuse it. Don't go to Mexico with it. Don't buy an expensive car, but just have it there for the times when there's opportunities or slower times where you're lead generating like crazy, but you have no results, right? One of the things that I've found with many people is they hate debt. They don't like debt, but debt is your friend. Debt is your partner, and you can't save your way to wealth. And wealthy people understand this, because the more that you leverage debt properly with hard assets like real estate, the wealthier you'll be over time. Now, for those of you who aren't familiar in business, there are 3 forms of ownership. There's a sole proprietorship, there's partnership, and there's a corporation. So all of us generally start off in the real estate business as sole proprietors. And the idea is that once you hit a certain level of profitability, you're going to want to convert to a corporation. And even in my first business, the maternity business, when we first started, we were, running some losses. So you keep it as a sole proprietor until such time as you start to become profitable, because you might have a job in the beginning, so you have some offsetting income to offset those losses, but then you want to convert it to a corporation after. Now, partnership is when you have joint and several liability with another person. I always tell people that, be very careful with partnerships. In a marriage, you're not jointly and severally liable for debts of the other person unless you've signed on for them. But you're not responsible for your partner's debts if you're not on any kind of guarantee. But in a business, in a partnership, you are. One of the things I've always told realtors is make sure, even from the outset when you start your business, do not commingle your expenses, personal and business. You can have a personal bank account, just keep your commissions coming in there, your cell phones coming out of there, your gas, your office supplies, all of that completely separate. It doesn't have to be a corporation to do so. And when you're using credit cards, always use separate credit cards. I have probably 11 credit cards. I use some for Airbnbs, some for regular rentals, some for my prec, but it doesn't have to be a business credit card. Just keep it separate so that if you're ever audited by CRA, they'll eat you alive if it's all mixed up together. And quite often I found realtors very, very stressed out when it came to tax season. They had shoe boxes and receipts flying, and it doesn't need to be that complicated. Always start the year on track. I always encourage people, if you do set up a prec, the accountants generally will pick year ends to defer your taxes throughout the year, but that's also because accountants want to spread out their clientele with different year ends. I usually keep December 31st. It's just clean and easy. So I always tell realtors that aren't precs, if you're going to do it, try and do it in November, December, or January for the new year so that you start off on the right foot. Credit is essential for your business. When you do set up a corporation, that corporation has its own line of credit, typically, its own credit card. Everything is tied directly to that business. But in the meantime, if you have a personal line of credit and you're a sole proprietor, just use that if you need it for your business. All that interest is deductible, but just keep it clean. Don't be mixing, Christmas gifts and groceries and that on that line of credit. Bookkeeping should be immediate when you become an agent. I was astonished when I first started as a realtor. Many realtors were doing their own bookkeeping, or they had their relative doing it in Excel. And I mean, these were people making over $200,000 a year. I said, are you crazy? Like, what are you doing? You need to get a bookkeeper like right now. And they would also focus on the cheapest bookkeeping. They would be so obsessed with the rates. And I was thinking, you spend so much at Starbucks and you do this and that. Just pay what it takes to get a good bookkeeper. This is your business. This is an essential tool of your business. I always tell people, don't use cash to buy anything. It's just hard to trace. You don't want to have all these receipts. Use a credit card that's specific to your business. Use an Interac card specific for your business. Then the accountants can work right from that. They can tell immediately what that expense is. You won't miss any expenses on your tax filings. And I always used 5 documents I would submit, even to this day, to the bookkeepers. I think I only submit 4 now, but people were always astonished by this. But I basically send my bank statement. I send my credit card statement. The bookkeepers, they know essentially what my expenses are. If there's anything in question or I see something misallocated, I'll tell them to change it. But that's all they need. They can back out the GST from those numbers. Then my office statement that Naomi sends us, that gives them all of those expenses. An MLS statement is ideal, but even that goes on the credit card so they can pick it up from there. And then I always email Michaela for a commission statement for that month. So I just emailed her for February. Please send me the summary, give it to the accountants. They know what the income is. They can pick the expenses, and then it's seamless. And then once you get to the end of the year, if you've had your bookkeeping done throughout the year, it's quite easy then because everything's already done. There's no big stress for tax season.
Kelly,
Yes.
with regards to keeping your receipts, is it best to keep the paper receipts, or can you scan them and just put them in a file in your computer?
Either is fine. Either is fine. I have been audited in my first business where I didn't have the receipts, and they let me off because they could see that all the bank statements showed the GST broken down in the categories, but they said don't do that again. So I do try to keep my receipts, but they're not the most organized. I just throw them in a box, and it's really only for audit purposes, right? In terms of using your monthly profit and loss statement as a planning tool, I had the good fortune of having a private session with Sarah Reynolds. How many of you know who Sarah Reynolds is? Only a few of you. Okay, Sarah is the #1 female agent at Keller Williams. She did $40 million in GCI last year. She's basically my hero. And in the US, the top women in Keller Williams, the top agents, created a company called Her Best Life. And what it was is they came to the realization amongst themselves that they needed to do things differently than men. They needed a support structure together. They needed to create their own tribes. Because in reality, in business for women, there are many stresses that are different running a family that are different than what men experience. And so they created this company called Her Best Life. And they have an annual retreat. They have a variety of little clubs that are online, even a net worth club. And they also have an inner circle, a mastermind called the Empire Circle. So it's a fairly expensive group to belong to. But if you want to see yourself move in the future in a certain direction, you have to be around different people with a different mindset. So 2 years ago, I joined the Empire Circle, and I'm around, women that are in the top in their states, like the #1 agent in Louisiana, the #1 agent in New Jersey. Plus, I have the mentorship of these top 11 women at KW that would never give me the time of day otherwise, but now I have their cell numbers. And in this case, that's why I was able to get this private session with Sarah Reynolds. So Sarah basically said to me, okay, I see that your wages are a little bit high. How many of you follow the MREA? Millionaire Real Estate Agent. It's our Bible here at Keller Williams. So in the MREA, the Red Book, there's a breakdown of different levels of production as to what your expenses should be as a percentage. So she said, you're running at 28%, you should be at 15%. You're going to need to do something about that. And she said, what I want you to do is that I want you to go to your team and I want you to get them to present a proposal to you for how they're going to make a return on their wages. The optimal is going to be a 4 times multiple of what you're paying them. But in my mind, I thought, well, if I can get them to do 1 to 2 times what I'm paying them, that'll be a great start in the right direction. And so that's a task that we have underway. And this is an example of where you use your P&L as a planning tool for the decisions you're going to make in running your business.
What was your last name?
Reynolds, Sarah Reynolds. Yeah. And the women who started the Empire Circle, they have a podcast called Empire Building. And it's really phenomenal because you have all these alpha females that are giving you all these tips on all these different things with your business. I highly recommend it. I listen while I'm driving, listen while I'm at the gym. Now, I try to get most of my data to the bookkeepers by the 15th of the following month, just so that I can get a handle on where things are at. And for those of you, I don't know if you've heard the term in Keller Williams, we use the term red light, green light. So if you're in a period where your expenses are too high or sales are down, you're going to stop certain things with a red light. During periods of better profitability, you're going to take on more expenses or more investments. And one thing Gary Keller once said, I heard him say, which I thought was pretty interesting, when it comes to training, personal development, that is never something you should red light because it is an infinite return in terms of your development and your potential for the future. Like training, when you're taking training like family reunion, mega camp, any of those things. And I sort of struggled with the decision of rejoining the Empire Circle because of the cost and the change in the market. And I said to Sarah Reynolds, well, I'm a little worried with the shift. And she said, that's why you need it right now. You need it more than ever. So I said, oh, damn, she's such a closer. Don't stand a chance with this one. I also used to belong to Mastermind Ben Kinney, who's our #1 agent at Keller Williams, who's in Washington State. I had the chance to be in that mastermind for a year, and that was my first introduction, which led me ultimately to the Empire Circle. And one of the things that Ben always said was, don't let your lifestyle put pressure on your business. And realtors are famous for doing this. Expensive cars, expensive vacations, eating out, all of this stuff. And those habits that they have put pressure on their business. Ben was making over $1 million a year, and he was only paying himself $6,000 a month. Not only that, he had a house with 4 or 5 rooms, and he was renting out all the rooms to roommates. And the reason being, he wanted to grow that business. He wanted to be insulated all the time from whatever could happen, and he wanted to take advantage of opportunities. And I think it was about a year, maybe almost 2 years ago now, when he did his capital raise, and he raised $100 million to grow his business. So I don't even know how many expansion teams he has at this point or what his GCI's at, but it's really high up there. He also explained that with cash reserves, you can take advantage of opportunities, you can hire talent, you can grow your business, which you can't do when your back's against the wall. Small example of this, we always grab lock boxes when they're discounted. We just picked up a bunch for $25. When you have cash, you can do things like that, right? And you can take extra training. You can run different marketing. Now, people always ask me about when and why to PREC. The biggest reason to PREC is because our highest marginal tax rate in BC is 53.5%. So when you're a sole proprietor, based on your net, that's the tax rate you could potentially pay. And the thing about our business is you can jump so rapidly, you don't even know that it's happening. Between my second and third year, I jumped from 135,000 GCI to 350. And had I not been set up as a PREC, that would have been a painful tax bill. But fortunately, I set it up before I really totally needed it. I just knew I was on the track I was going to need it. So a small business tax rate in Canada is only 12%. So as long as your profit in your PREC is under 500,000, you're only going to pay 12%. Once you exceed the 12% or exceed the 500,000, it jumps to 40%. So you can see that that spread is like a 41% differential. And I always say, if you're going to spend everything you earn, it really doesn't matter, okay? You'll just pay the tax and you'll have no money anyway. But if you're thrifty and if you have a certain amount you're going to live on and you want to keep that difference, you know, you could be saving 41,000 per 100,000 of profit here. And so if it's sheltered in your company, in your personal real estate corp, you can then use it to buy more real estate. You can use it to invest in the stock market. You can, whatever ventures you want to. But you've now preserved that capital that you don't, if you take it out of the business and try and do it personally, you're going to pay a big tax bill on that.
Kelly, if you take it out, but then you put it back in, is it still in or has it been taken out?
I guess it depends upon the speed with which you do that. If you take a loan out and repay it, that's okay as long as it's before the year end. Otherwise, they're going to deem it to be income. Now, the costs of being a PREC, for those of you who don't know, the corporate tax filing is going to be about $2,500 with the accountant. Annual filing report with your lawyers is going to be about $350 to $400. You're going to have to pay for a second license. You have your license and your PREC's license, so another $1,400 or so. It might be higher now, I don't know. There's also this Land Transparency Act filing we have to do now. That's going to be another $300, and then there's a federal filing that just came out this month. So consider it to be $5,000, okay, as the dedicated amount you're going to be looking at. But if you're going to have potential upswing in your business, you know, it's really worth it. Now, in your business, you take out income in two ways. You either take it out as dividends or you take it out as wages. If you take it out as wages, you've got to do all the remittances for CPP, UI, all of that monthly. And it's a bit of it can be a bit of a nightmare. I personally take out only dividends for my business. It's just as I need or want money, I draw it out. And then at the end of the year, the accountant just calculates what the total dividend flow is, goes on my T5 summary, and I have a T5 that I report on my tax return. Dividends are taxed at a lower rate, but that's because the government doesn't want there to be double taxation, whether you take it out as wages or whether you take it out as dividends. Because with wages, you take your commissions, wages come off of that, you pay tax on the net. With dividends, the dividends come out of after-tax profits, so you then pay tax once you take those dividends out. I don't want to overcomplicate it, but just sometimes accountants will optimize the amount between wages and dividends if there's a reason that you need to show some wages for other credits or Now, when it comes to having a PREC, generally it's advisable to have a holdco above your PREC. A lot of times people start with a PREC and then they decide later to add a holdco, but there can be tax consequences of doing that. It's actually better to do it right from the beginning. But the reason for holdco is because you can't buy real estate in your PREC. So once you have a holding company, you can move money tax-free between any of your associated companies with no tax consequence, tax-free movement of money. So if you want to take money out of your PREC, you can move it up to holdco. Holdco can put a down payment on a pre-sale or a property. The only problem with doing that is holdco is kind of a protected corporation that isn't easily targeted by creditors. So it's kind of a place where you want to park cash. If you buy real estate directly through a holdco and that real estate gets targeted by a tenant or a lawsuit or something, it can target all of your assets. So it's better actually later on, you don't have to do it right away, but you add a separate real estate company and money comes from holdco into here. This real estate company buys the real estate direct. So as an example, I always try to tell people, it happened to my husband. He has had an operating business similar to our PRECs. Now this business is out there doing a lot of things. A lot of times you have disputes with people. They can come and they can garnish this account, okay? It happened to my husband to the tune of about $13,000. where he had a dispute with an accountant. Accountant just filed in the courthouse, money came right out of the bank, and next thing you know, it became a mediation in court. People see your checks coming out of this company, they can figure out your bank account, they can garnish it. That's why Holdco, it's protected, nobody sees it, nobody knows about it. It's harder to garnish. Of course, Revenue Canada can garnish anything, but it's just a smarter idea for asset protection to keep Holdco separate. Like, I have different apartment buildings with partners, and typically I'll try and run it from a real estate co. will own my percentage in the building of the new apartment building corporation, just so that it's not direct with Holdco. But if you have specific, yes, Allison.
So I do have a crack and I have a Holdco. I haven't made a lot this year, so I don't have a lot, but I have money sitting in my crack account. So it's exposed and I actually need a Holdco account. Is that what you're saying?
Yeah. And also, like, when I take my dividends, I don't take them out of my PREC. I move the money to Holdco, and then I draw my dividends directly from Holdco. I think Furman's next.
How many properties do you buy in the real estate company?
Generally 4 or 5, but not apartment buildings. Those are separate. They have their own companies. But little condos and that, yeah.
Can you give me some more examples of what you would put in a Holdco, like what a Holdco, like what kind of assets are we talking
Cash.
about? Just cash?
Cash. I mean, you could do some investing and marketable securities, low risk stuff,
What if
maybe
you
a little
have-
bit of private lending.
What if you own property outside of Canada? Or is that something to talk to?
Yeah, you better talk to someone else. I don't know, because I don't practice as an accountant for a long time, right? Susan?
What is the advantage or difference of paying yourself dividends from the Holdco versus the PREC?
Well, my Holdco owns my PREC, so I can't take dividends out. Because Holdco is the shareholder of, like, it owns the PREC. I can't take dividends out. It would be treated as wages.
And then my second question.
I'm the shareholder of Holdco. That's why I can take my dividends out there.
So if you were going to buy property from your Holdco,
Yeah, I have done it, but I stopped doing it at a certain point because I realized it was putting the Holdco at risk.
Why is it a risk?
Well, because if someone tries to sue me, like a tenant in an apartment building or something, they're going to target that in the lawsuit.
That's why you put it in real estate.
Yeah.
How many
John.
properties will you hold in real estate?
Well, like he asked me, if they're small, like 4 or 5. Yeah. John?
I understand when you set up your PREC, it's a great idea to do your holding company at the same time.
Yeah.
So you have that big cost of having it.
Well, because if there's value later on, it creates a tax liability. Yeah.
We've done that. We don't have a real co set up yet.
Yeah.
That is an easier one to add on when it comes.
Oh, yeah, it's super easy. Like, you could be, so typically when we buy properties, we put an assignment clause and everything. A corporation can be set up in a day. You probably don't even know the name of the numbered company. So before closing, it can be set up and added, and it'll be added under Holdco.
You have 2 more PREC questions.
Yeah, sure.
And when saving them. One is, do you know, is there a rule where you can actually rent your house back to your PREC for 14 days in a year? You know anything about that?
Oh, in the US, that exists in the US. There's a name for that. It's like that golf course, the Augusta rule.
That's right. that
Yeah.
got that,
Ben Kinney does that. He taught us that. Yeah, he
We
does.
cannot do it in Canada.
No, not that I'm aware of.
What about if your kids are of a certain age and they deliver flyers and stuff envelopes and they work for you? Can you then, under the PREC umbrella, have them as
Absolutely.
shareholders or as
Well, they don't even have to be shareholders. They can just be employees of your business.
employees?
And so the personal tax credit that we all have is about $15,000 now, I think. You can pay them up to $15,000 per year, and there'd be no tax.
Yeah, so that's over 14 or 15 or is there an age?
There's not a specific age, but like you take, for instance, my son, he's kind of a tech genius. He can do anything with technology, right? So it would not be unreasonable. He's 16,
Jackson?
Johnny,
Johnny?
just like you, Johnny.
Also a genius.
You know,
Yes.
Oh yeah, our son is Johnny. Okay, Johnny.
so he's doing editing. Pete writes, my husband writes books. So he's doing editing for the books, he's sending out email campaigns and all that stuff. So, you know, there's a justifiable value there to that. It just has to make sense relative to the work they're doing. And if you were ever audited, you'd have to prove that they did the work.
Now, is that 15 grand, for example, actually going into your son's account building as well?
It doesn't
You
have
don't
to.
answer that.
No, in my case, no. No. He hasn't,
How do you set that up? So that you can do the, you know how?
She knows.
Why are we doing this?
So Kelly,
hang on. Okay, yes, Gail, I got two more behind you.
so your holdco and your realco are basically run out of the prep though.
They're not run out of there. The Holdco owns the PREC and Holdco owns Realco. There's separate bank accounts, separate everything.
But my accountant will understand this much more.
May
than you
not.
do, right?
May not, depends on the accountant. You have to have a real estate savvy accountant. Took me years to find mine.
You'll be
Lucky.
lucky to have a good account.
Exactly. That's his name, Lucky. Allison, yes.
So I just wanted to inquire, so, all your income is coming into Kelly Prac.
Yes.
You're moving everything into the holdco. because
Yes.
You don't want people that are aware of your real estate business to leave you exposed. So you move it into the holdco to protect it.
Yes.
But when you buy property, you move money over to the real estate co.
Yeah, it goes
to
from,
purchase.
so I might move it from PREC up to Holdco over here.
Okay, but then you're exposed if a tenant's pissed at you or something. And so basically, like, it sounds like you're, certain bubbles up there, certain codes versus the crack are exposed to different people and protected from other people.
Correct.
But it's not super clear to me.
I'd say Holdco is fine if it's like separate and the majority of the assets are there.
So
The cash.
Are
Cash.
you suggesting that at a certain volume of properties, you want to then have a real estate co rather than a hold co?
No. You have to always have Holdco.
But you're not buying property within your hold co. You're only buying it in your real estate co.
Yes.
But at one point, I believe you said you did used to do that.
Just to save money before, because you open a new company, you got all the filing costs. So I did a few acquisitions and I realized that's stupid. I should stop doing that. So then,
So you don't, yeah, I'm still a little bit muddy about the exposure of the hold.
well, you can't predict the exposure, right? If someone's going to target all your companies, they're going to target all your companies. But if they're a specific, for instance, tenant of a specific building that's held by Realco, they're going to name this one in a lawsuit, right?
Right, and so you've got, your other stuff is protected in a hold co.
Yeah.
So you're just sort of dividing your.
Yes. And you can keep adding Realcos, right? You can keep adding more of them, and you can layer them under each other too.
What would be the advantage of that? Just to diversify
Well,
your exposure?
The banks will lend you to like 4 or 5 properties in a company. So you're going to hit a wall where you need to open another company. Or you might have different partners and, you need different companies. It's just cleaner for the accounting and for everything too.
So you've got a lot of credit cards.
Yeah, I do. Yeah. Susan.
We have our prep in our whole co, and we were told not to buy another investment property in prep, to do it so in our whole co.
Okay.
We are employees of our prep.
Okay.
And by what you're saying about dividends, when you go to buy a property and they check for financing, they always do it based on your business income and your personal income.
Yeah.
Would there be an advantage in that respect to pay yourself a dividend? And
The-
then they only look at your business?
No, they look at both. But it's just that when you convert from wages to dividends, for instance, there can be a period of time where they want to see consistent dividends, right? So, like for instance, when a realtor changes from being a sole proprietor to being a PREC and then starts taking dividends, sometimes they then need 2 years history of dividends before the banks will lend easily to them. That's the only thing I'd say you got to watch for. But you can do both, right? You can take part wages, part dividend too, right? We need a separate class for Lucky to teach.
Is that who you're using? Because I use them as well.
Yeah. So just to recap a few of the things that we talked about, you move money tax-free between companies, which is great. You can move money up to your holdco, and then your real estate holdings can be separate in a separate real estate company. Move money from your PREC into holdco and pull out dividends. Protect yourself from any creditor garnishing on the active company I showed you. Banks usually don't want to see more than 5 or 6 properties on your own personal tax return. So that's one reason why using corporations is advantageous, because you can put 4 or 5 in each company usually. Now, PRECs can qualify for things like government loans. So how many of you took advantage of the CEBA loans? Any of you? So during COVID, the government came out and loaned $60,000 to companies that had non-recurring or recurring expenses or set payrolls. They made it super easy. I went out and got a whole bunch of them. So we were supposed to repay by the end of 2022. They did an extension for a year. Now it's the end of 2023. We'll see what they do. But basically, if you repay it on time, you only repay 40,000 of the 60,000. You get to keep that 20. If you keep the 60, you have another 2 years at 5% interest, which starts on January 1st, 2024. So it gave businesses the injections that they badly needed. Like we in real estate didn't need it as badly because we had a hot market, but it's always great to have extra capital that you might not know, what you're going to use it for, but it's there for taking advantage of opportunities. So the PRECs qualify for their own lending on situations like that. In real estate, it was super easy. Like with the apartment buildings, I could just produce some mortgage payments, some utilities, property taxes, done. I hit the $40,000 minimum expenses to qualify for the PREC fairly easily. So there are these benefits of having corporations set up that can qualify for these kind of programs. As I mentioned, lines of credit, credit cards for the PREC. When I bought my last car, I financed it, and I realized quickly I better put it through the PREC, not personally, because I don't want my debt service ratio impacted for mortgages, for principal resident acquisitions or anything like that. So even though I paid a slightly higher interest rate, it didn't show up on my personal credit report.
Do you own any property under your personal name?
Yeah. Properties that I've bought to live in, yes. I keep all my houses. Like I move out of one, then I buy another one, turn it into a rental. So I keep all those, and those were financed as principal resident properties, so they are in my personal name. Yeah. Yes.
We have an investment property in our own name. Is it easy or can be done to transfer it to?
The problem is you're going to have to pay property transfer tax, and you're going to trigger capital gains. So you can do something called a bear trust, but then it's a change of use. You have to see if it's worthwhile doing that. So as realtors, we don't have pensions. And how many of you have listened to David Goggins or read his books? Phenomenal. He Can't Hurt Me is his first one. And he's got a new one called Never Finished. David Goggins. He's a former Navy SEAL.
Goggins, G-O-G.
2 Gs.
I-N-S.
Yeah. So I like to quote his line, which is, no one is going to save you. You got to set up the parameters for your life, your strategies for your financial protection. If we get sick, we need assets to fall back on. At least if we have some investment properties, even if we had to sell one, we'd have some capital to carry us through our sicknesses, right? We're frontline to deals. It's legal insider trading. We see the best flips. We see the best rentals. We get early pre-sale access. I mean, you name the opportunities that we see. So what I like about real estate with my accountant brain is that you can predict your net worth with real estate. You can say, okay, I know this property is going to go up at least 4% a year for the next 10 years. I know how much of the mortgage the tenant's going to pay down, and I can predict the cash flow. And you can say, okay, if I buy one a year for 10 years, this is what my net worth is going to be. So you can sort of gauge what you can build for retirement versus just putting money in the stock market and not knowing for certain if the capital is even going to still be there. As realtors, we understand the product. Like we know what it is. It's a no-brainer. My first original joint venture partners were all trades guys because for them, they were welders or carpenters, whatever. They understood houses. My accountant friends were just like always paralysis analysis. They just couldn't wrap their head around the risk. For us as realtors, retirement should be a choice. So many realtors keep working because they have no option, right? Yes.
So let's just say you think of a real estate code, okay? And I buy a property with Gale, and I put it in there. And then I go to buy a property with you. Can I also put it in there, or would you guys would your name be on the company? And so I would have an individual. I would have one with Gale because she and I plan on doing businesses together. multiple
It's
times?
cleaner to have separate companies for separate people.
Okay, but
it's
would
just
her name
easier.
be on it as or would I be?
It depends. It depends. It depends on her ability to qualify. You know, what's ideal a lot of times when we do joint ventures is both of our companies come together on title. So I'm just selling a property right now, which is something I don't normally do, but he has a company, I have a company, 50-50 on title. So at the time that it sells, the proceeds will go to each company because we have an accepted offer on it right now. So we're 50-50 owners. This particular property, I thought I'd show you some local examples of things I'm doing to create cash flow and money, because sometimes we think, oh, we live in Vancouver, it's so unaffordable, I don't know how to do it, I don't know, I can't get in the market. This is a little townhouse, it's a 4-unit complex. It was renovated by women investors, and the units started selling, and I was showing them to everybody, saying, oh my God, this is so great, it's such a perfect opportunity. And they're like, it's kind of dumpy, you know, like they didn't think it was that sexy. But I think numbers are sexy, so I knew it would be a phenomenal Airbnb. And so I watched 3 of them sell, and I couldn't stand it anymore, so I had to buy the 4th one. And the first thing we teach investors always is tie it up, because if you don't tie it up, you could lose it, you'll never get it again. And money follows deals. So I went out, I was talking to a few people about joint venturing with me. I thought that might be the route I was going to take. Purchased it for $570, 3-bedroom, 2-bath, rentals allowed, 1,200 square feet. I bought it in October 2021. What ended up happening is I qualified out of nowhere for a $200,000 operating line. I have commercial space upstairs next to the market center. Back number of years ago, 5 or 6 years ago, we were having problems with the market center. We were growing too fast. We didn't have enough space. So my MAPS coach said to me, what are you going to do about it? I said, well, I have no choice. I have to buy space. And she said, okay, when are you going to do that? I said, well, I guess today I'm going to look at the MLS. So I typed in 20099 Lougheed, because at the time, all these commercial units were vacant, okay? And they had been taken over by a buyer, and they were selling them off individually. So I thought maybe one of these commercial units. When upstairs, these strata condos popped up, there was these 2 that I have for sale. They were a Korean language school. I didn't even know there was offices up there. You know, there's optometrists up there, orthodontists and everything. Well, that was cheaper than these commercial units, so that was perfect. And being a real estate addict that I am, I had seen an ad in the Western Investor about the BDC qualifying businesses for 100% financing. So what I did was I bought those 2 condos. The Business Development Bank gave me 100% mortgage on them. All I had to pay was my closing costs. Now, it's a higher rate than you'd pay with a bank. But for those of you that are working with clients who have businesses, if they have good credit and good cash flow history from the business, they can actually qualify with the BDC, which is an entrepreneurial bank, helps entrepreneurs to get into real estate. Not only that, they lent me money for renovations. So they gave me a renovation loan on top of that. And so because I'm a client of BDC, every once in a while they send me a promo operating loan that they just literally fund in 2 or 3 days, and there's no requirements whatsoever. Like I thought maybe I'd have to submit receipts, something to show what I was going to do with the money. No, they just gave me $200,000. So it just happened to be at the time when I was buying this. Now I have to repay that over 5 years, but I'm repaying with dollars that are worth less in the future. And I get into the property today, earning the cash flow, which helps towards making those payments. And I didn't have to have the money at the time. So just a trick for you guys. You never know about these things till you're in them, right? So this is what it looks like. It's got professional staging. My stager designer shops for everything, all the linens, bedding, everything.
How much does it cost you to furnish that?
20,000, this one. I don't do anything, right? I don't even go into it even sometimes. She just charges an hourly rate for shopping. And we've got a handyman on call. He comes and hangs all the pictures. He meets Shaw, sets up the internet cable, all that. So I predicted, and rightly so, that I'd get about 145 a day, average 27 days. Currently have a family for 3 or 3.5 months in there that are renovating their own townhouse. Mortgage is 1960 because what happened was I couldn't get a mortgage fast enough at that time with a complicated portfolio. I had to get private money. So I got a 5.5%, which now seems cheap, but back then was a little more expensive. And I will be refinancing it with ARB lending soon in the near future. But so that's an interest-only payment. This is actually an Airbnb fee of the 118, property taxes, strata, cable, internet, insurance, repairs. makes about $1,090 a month in positive cash flow.
So that's for the strata that allows short-term.
Well, here's the key thing. When you're doing Airbnb, you got to make sure you're in the right strata. This is only 4 units. And basically, I suck up to all the other owners all the time. Whatever they want real estate advice, they need repair costs or something, I'm the first guy in with the money. Like whatever they, well, they could give me problems. But actually, as it turned out, my neighbor who wanted lights in the back and I paid it, no problem, he just bought a pre-sale from me. So, hey, we're buddies now. So when you look at the down payment, the inspection, the appraisal, the transfer tax, furnishing, legal, it's about $174,000 to put this deal together. So my cash flow right now returns about 7.5% on the cash invested. If you assume a 4% appreciation on that money invested, it's about 13%. So it's almost 21% return right now. Once I switch to a blended payment, when there's pay down, that'll add another 4 or 5% to this return, okay? So like what else can you invest in and make this kind of money and predict your financial future, right? I always tell clients this too, right? I don't know if I updated this properly. I think it should be higher. I think I missed this slide. But basically, I like in a presentation I've done, which I'll probably reteach again, it's teaching realtors how to build a retirement. I just take the value today, I take it up 2% a year for 25 years. I do the same thing with the revenue expenses, and I assume that it gets paid off, which gives you a cash flow in 25 years from now, as well as your asset value. So it seems a little low to me to be 656. I think it'll be much higher. But I was just trying to show that you would have a certain net cash flow, and if you did 10 of these, you'd have $6.5 million and $25,000 a month of cash flow. So you want to start thinking strategically about how to structure yourself to be in that position. Now, I thought I'd also show you something else that I do called arbitrage. I do Airbnb arbitrage, which is where you rent a unit from somebody else, you furnish it, and you make the profit. So I do this on some of my apartment buildings with partners because I'm only a partial owner. So I just pay rent to the building like anybody else. I furnish them, and then I make the lift on the profit. No one's going to give me a problem because I'm a part owner in the building. It's easier than strata properties. And but you can do this with any rentals where the landlord's okay with it, right? I'm actually one of the best tenants because I fix things all the time. My Airbnb guests let me know if there's a leak, and we take good care of the property. So to set up this one, it was $15,000. I charge a daily rate. It's in Cloverdale. I'm going to show you pictures in a minute. I've done it for over 3 years now, and I average about 28 days on this property. So it brings in about $37.80 a month, which is 127% return on my cash. So it takes about 9.5 months to recover the money that was invested for the furnishing. And in terms of a premium on rent, it's about 119% more rent than you would get on a regular rental. Because people always say to me, well, how much more is Airbnb? I would say it's like 50 to 120% more. So when you factor in the rent I'm paying, now I've had it for about 3 years. I've been paying rent, so I get hit with the 2% a year increases from the property manager, but I'm below market on what I'm paying still. The Airbnb fee is 3%. My Shaw, hydro, supplies, repairs, $15.85 positive cash flow on this one. And that's from something I don't even own. So it always amazes me when people work for years and years for a government pension. They don't even know how much they're going to get. They might get $5,000 a month, maybe less. CPP is what, $1,200 or something? You can just do something like this and you can have a much better pension. So this is the building. It's a 39-unit building in Cloverdale. We redid everything in the building just at the time the NDP was stopping renovictions. And so it's nicely finished. The stager did all the furnishing, etc. And being Cloverdale, it's pretty popular because it's still close to Vancouver for Airbnb bookings. Now, in terms of options for cash that you need for investments, if you've got a home equity line of credit on your own property, that's something you can use for down payments. You might have some excess funds in your prec. You can borrow the money from people. I have a friend, a realtor, who has a large inheritance, and she came to me in the last few years and wanted to invest money with me. And she doesn't want to work anymore. She just wants steady cash flow. So I said, well, listen, why don't we do this? Why don't we structure it like a mortgage? and I'll just make monthly payments to you for the next 25 years. Because she wants to live to 89, she figures. So I just make payments, send her checks every month, and I take the money. I do Airbnbs, I buy out partners, all different ventures. She's happy, I'm happy. Yes, Allison?
Have you, write the contract for
For that?
that? Yeah.
Well,
just like a lawyer or-
right now, we just have promissory notes. Like, promissory notes are just a one-page document that's a personal guarantee that you're going to make these payments. She trusts me and my character. But we will probably, it's becoming a large amount now, so we will be registering a mortgage or two to protect her interest.
So she's the one that exposes.
Yeah. But, you know, when you cut these deals, like comes down to the quality of the individual you're dealing with, right? I mean, I would sell a property if I had to, just to repay her if she needed the money, right? Yes.
So do you take all the pleading fees, admin fees out of her share because you were running the Airbnb?
No, she just lends me money to do whatever I want with it.
Oh, okay.
I just pay her between 8 and 8.5% on her money.
Okay.
She's not involved in the investments at all. In fact, it was strange because I wanted her to partner with me on the Aldergrove Airbnb, and she wasn't comfortable with that. She didn't want an equity position, which is a much higher return. She just wanted a flat interest payment every month. Okay.
You get a template for promissory note?
Probably, you know, we can probably send you one if you need something that we've had over time. You can partner with clients who put up the money and share with you 50-50. I have one client, two sisters. They put up the down payment on the mortgage, and I put in the furniture. I do the Airbnb management. Now, we did this for over 2 years, but the strata in that particular building targeted us, and my partners couldn't handle the pressure anymore. So we had to take the furniture out, moved it somewhere else, and then we're just running it as a regular rental. But that's an example of, you know, a joint venture with different people bringing different things to the table. We handle the regular management now for it. You can borrow money from someone's RSP. There's tons of people with tons of RSPs. RSP money can be used as mortgage lending. So someone can lend you their RSP in the form of a first or second mortgage. So for instance, if you have a property or two, they can register, let's say $100,000 on your property. You negotiate with them the terms of the lending, just like a bank, and you repay their RSP, the interest cost. It can be annual, it can be biannual, however you structure it. So it's one way to unlock some money to use for investing. There's a book written by a Canadian guy in Alberta called RSP Secrets. That's quite good. That'll tell you all about this. Olympia Trust is the trustee that most investors use for facilitating that kind of deal. Now, in terms of GST, make sure you're putting your GST collected aside, or you can have the office take it for you. I don't really like the office taking it because I'd rather keep the cash in my account. And, you know, the way GST works, you're collecting it, but then you're offsetting all your expenses of GST against that. So then you're remitting the net at the end of the day on March 31st of the year following. When it comes to slow paying your taxes to CRA, they get a little bit antsy about trust account money like GST and payroll tax. They generally like that repaid a little faster than corporate or personal tax. So just be aware of that. But they do take payments. Like I send them a bunch of post-dated checks because I like to keep my cash for other opportunities in the business. But it's up to your comfort level as to if you want to pay your taxes quickly or not. Another thing I want to touch on is employee or independent contractor rules. This is a 4-point test that CRA uses to determine what type of relationship exists. So if you're hiring employees or independent contractors, you want to look at these 4 tests. The first one is control. You have a much better chance of being deemed a contractor if you can show that you were the individual responsible for planning the work to be done, choosing the hours, or deciding the standards to be met. So an independent contractor might say, oh, I can work from 10 to 4 today, and I can come tomorrow 9 to 5 or whatever. You know, they're showing that they have control over their hours versus you saying you have to be in 9 to 5 every day, right? So this is relevant because if the person is actually an employee, you've got to be collecting all the EI, the CPP, making the proper remittances every month. But if they're an independent contractor, they can just send you an invoice every 2 weeks and you can just pay that invoice. Yes.
So if you have something like a virtual assistant, maybe more of, would you set them up as a contractor?
Yeah, they're a contractor because they're not even in Canada. They're not coming into the office. They're using their own assets and they have other clients. Okay, they're not economically dependent solely on you. Ownership of tools. Self-employed individuals are more likely to be supplying their own tools, I put towns, and equipment, as well as being responsible for their own maintenance. So all of our team members have their own laptops, their own cell phones, their own video equipment. Chance of profit or risk of loss. Your financial involvement determines whether you're involved in an employer-employee relationship, or whether self-employed people usually have some degree of financial risk or more opportunity for profit than other employees. So that's another test. And you can be paying someone as a contractor and you might never be audited, but if you do get audited, they're going to go back and they're going to calculate all the remittances you should have made and charge you penalties. And then there's integration. An employee's job will be an integral part of an employer's business. Where the tasks are performed by a self-employed person, they'll be less likely integrated with the owner's business. So is that person critical to the business continuing or not? Now, one of the things that we learn in BOLD at KW and in a lot of different training that we take is that we have 5 jobs as realtors. This is the only thing we should be doing. But when you start as a realtor, you basically do 100 jobs. And the goal, as you start to become more skilled and better trained, is to sort of farm out as much of this as you can, the other jobs. Our highest and best use of our time is negotiating contracts, signing listings, signing buyers, setting appointments, and doing script practice. Those are not things we can farm out, but everything else we can. Putting up lock boxes, sending, something on delivery at possession, taking a sign down. I mean, you name it. There's picking up deposit checks. We use couriers for all of that just to save our time and energy. A millionaire makes $500 an hour. So in terms of leveraging yourself, you want to increase your hourly rate. Now in our team, we have 2 licensed assistants, Sid and Diane. And over time, they've taken on a lot of tasks for me. They act as showing assistants for me. So they run around with a lot of the buyers. And the typical showing assistant model is you receive a 10% commission if you're a showing assistant for an agent. So sometimes they'll both be helping the same client. So they'll just split the 10% and make 5% each. But it saves the wear and tear on me of constantly running around, or if I'm traveling for conferences, I can't necessarily be there. So the clients feel like they're being taken care of. These guys get to make more money. I'm happy because I buy my life back and my time back. Now, this is a slide that Ben Kinney showed us one time, and he broke down the hours that a buyer transaction takes. You can see here that showings takes up 10 of 20 hours to do a buyer deal. And there's 5 hours tied into inspections, appraisals, or other things. So if you can shave off this 5 hours, even closing is 6, and even part of that, I mean, you can save 50% of your time. And you can go there, and do another deal. And just like build yourself more transactions that way. It's a win-win. And at different levels of production, you're looking for different levels of leverage. You can't get more hours, but you can make more of each hour. You shouldn't be doing most things that realtors do. It's one thing to be busy, but are you being productive? Hire admin as soon as you can, even if it's only part-time. My first assistant, Cameron, still works with me today. It's been about 9 years now. And he started off 1 day a week, then it was 2 days. By the time it hit 4 days, we both realized that we would be in a better position if he was licensed. So that's what he did and never looked back. Prior to getting Cameron, I was up till 1:30 every night working, which I was younger then, so it was easier to do. But that's the year that my GCI jumped substantially, was once I had Cameron helping. As you grow, hire showing assistants, get interns, get VAs, do whatever you need to do. As I mentioned before, buy your own real estate, gain the appreciation instead of paying rent. And you can get some borrowing as well. BDC lends you on cash flowing business, as I mentioned. Now I want to show you this picture because for a lot of reasons. This lady here is Vilma, and she was my nanny for 13 years. She came from the Philippines. I got so fortunate to be able to have her help us run our household and raise our children. And I wasn't a realtor when we first got her. And we went through some very, very financially difficult times when my husband lost his business. And she worked with us to try and stay because she still needed her contract to be able to get into Canada. So she went out and she got a bunch of cleaning contracts and different clients in Maple Ridge so that she could subsidize our cost for her wage. I mean, that's how exceptional of an individual she is. Now, she was attempting to bring her children into Canada to give them a better life. Process. And so she had a lawyer right from the beginning. She tried to get him in on compassionate grounds. She tried to get him a kidney so that, the problem with our immigration system is if you're going to cost the Canadian medical system more than $18,000 a year, they won't let you in the country. They won't let the whole family in the country. So she per year. But unfortunately, his health jury has been working from the Philippines during this funeral to prepare this presentation for me today. And that's why it looks as fantastic as it does. And for Cameron's presentation for his class on Tuesday. And that is true talent. So I wanted to dedicate our class today to their dad and to show you what true leverage looks like, but also the human side of it. I wanted to show you this apartment building in Nelson. Again, it's a mixed blessing for me. A little suite that you buy a pre-sale in one of Trevor's developments. Just buy something, buy anything, and just carry it, hold it for 40 years. To do a book on the attributes of wealthy people. So for 20 years, he worked for free to study Ford and Edison and all these guys to see what the attributes they had. And he ended up becoming so wealthy that he was wealthier than Andrew Carnegie after he wrote this book, even though he worked for free. Phenomenal book. The Wealthy Code, Debt Millionaires, and the Banker's Code are all written by George Anton. Ben Kinney had told us to read this one and this one, so that's how I found out about them. Really, really give you a different perspective on debt. And The Creature from Jekyll Island by G. Edward Griffin. Terrifying book. It explains how the Federal Reserve was created. It explains how the wealthiest families control the world. And it explains a lot of what we're experiencing right now with inflation. And at times when you're listening to it, you think, oh my God, I've lived a bubble my whole life. I didn't really understand what was actually going on behind the scenes. But I found it quite useful with clients when they were panicking as house prices were dropping.
I would just say to them, listen, as long as we have inflation, as long as the governments are printing money, which they're going to continue to do, real estate is a hedge against that inflation. So just hang on, it'll be fine. It's on Audible, takes 25 hours to get through it, but it's well worth it. And that's it. That's all I wanted to tell you guys today. If you have any other questions. Yeah, we did order some pizza, but it's not here yet. Oh,
Almost embarrassed to ask this question because there's so many of us. You mentioned that earlier that you got discounted lock boxes.
oh yes.
Yeah, I know that's a pathetic question. But
No, it's not pathetic. It's perfect.
Realtors.
really?
Oh,
They order Craigslist?
Yeah, realtors getting other.
we actually have a reputation for buying them, so we do get calls.
Yeah.
But one of them was just in our last transactions. The guy just, I don't know why he asked us.
Well, because he's not a member of the board.
Yeah, and he can't use his own lock boxes.
So I don't need one.
But quite often we'll see it in, was it BC Realtor Corner or the Facebook or Cafe? Well, it's BC Realtor Corner. And so then it's fastest to the draw, okay? So we're like, we message right away. Call us, we'll send you an e-transfer right now. Yeah, that's what we do.
It's brand new, they're like $200.
I know. I know, we could even sell them, buy them and sell them off if we wanted to, but
Probably the ones that the non-boot too.
Yeah.
Which
Yeah.
are fine.
they work just great.
A little bit about that scenario, what you have bracket about paying your kids up to that $15,000 a year.
Yeah, for sure.
That
So
might look like.
it has to be a reasonable amount. So for instance, off the top of my head, it probably works out to be about $250 a week.
Yeah.
Is that's more than 12 because there's some months that have 5 weeks, right?
Okay.
Yeah, so it's probably about 13,000. So you can just cut a check or an e-transfer every week. You can't do it all at one time. The accountant said to me, you have to make it look like you're doing it continually throughout the year. So
And then that money just back in.
well,
On that.
honestly, I just deposit them on my phone and they don't really check that it's not my name. It says Johnny Fry or Ashley Fry, but I just deposit it to whatever account I want to put it
Oh, I see.
in. They never bounce back. But the paper trail looks like it's going to. Yes.
I was just curious about your investments. Do you start, are you primarily in Lower Mainland or do you go further out?
Well-
Like Okanagan, North, George?
I used to invest in Manitoba. I had 23 properties at one point in Manitoba, but I had a lot of. Firstly, the tenants were really rough. I had police break-ins, always issues, and the property manager was embezzling money left and right. So it was extremely stressful. So over time, I sold out of that market and got out of it. I bought a lot in Alberta because I belonged to the real estate investment network with Don Campbell. He was very big on Alberta. But honestly, Alberta's been terrible for the last 15 years. I don't recommend it, but I just keep most of my stuff there. It just keeps paying down the mortgages. This is the best market. Whenever I'm presenting at real estate conferences, I always say you can have your cake and eat it too. We have the best appreciation. So in terms of building your net worth, this is the place to do it. The only challenge we face is our price points are higher and our cash flow can be constrained. But if you do Airbnb, you can get the cash flow that you want. And we, as investment realtors, have typically always gone further out. We keep moving further east because prices keep going up. But, Mission, Maple Ridge, we used to do a lot. Mission, Abbotsford, Chilliwack, Agassiz, the numbers just work much better in those areas for investors. So I stick locally now.
Sorry, new business out in Mission, etc.
I know, and everybody thinks the way you're thinking. That's why mine are full all the time.
Well, that's what I'm asking. Who's filling your
So I have them everywhere. Okay, I have Coquitlam, Maple Ridge, Mission, Abbotsford, Chilliwack, Langley, Surrey. So Chilliwack right now, packed with pipeline workers. I have 2 running. I wish I had more. I should just set up some more because it's just crazy. They just sent more crews out. Some of them flow into Abbotsford and Mission too, the pipeline workers. In Mission, we have in Mission right now, I have 10 in Mission. So I have a nurse in Mission working at the hospital. I have a nurse in the Maple Ridge Hospital who's staying at one of my places. If you look at Maple Ridge, we have like a burned out hotel and a trailer park hotel. Nobody in their right mind would stay at Maple Ridge in the hotels. So it's just supply and demand. So it could be a hockey tournament, it could be a wedding, it could be a funeral, it could be people move here with good jobs and then they can't find a place to rent. So they land in Airbnbs and they stay in them until they can get a place. People sell their homes and they might not be able to move into one. I had a guest last year for 8 months that was waiting to get into the Brickwater in Maple Ridge and the condo just kept getting delayed. So there's all these circumstances where people need short-term accommodations.
This may be a kind of limited belief to interact, how many stratas will allow that? With the advertising and listing, or do they maybe not even know?
Well,
It's gotta be your strata homework.
Yeah, so what we do is we sell a lot of pre-sales and we've learned by default to try and get at the first AGM, we try and get our own people on the council. We have enough buyers that we try to control the strata council. That's probably the safest and best route. But yes, you have to do your homework and find, just like these little townhouses that I bought, those little 4-unit one, it's easier. If you have a duplex or a detached home or any of those things, those are easy.
Of course,
Yeah.
So you're getting.
Yeah. So we basically, you have to look for stratas that don't have a restriction on short term, but they may not be happy about it, but as long as there's no restriction in the bylaws, you're fine.
And you're setting those all up, like set it and forget it. You've got management people handling it,
Well,
not even-
Okay, it's not
Sure,
that
you
seamless, okay? Let me tell you a story about a week ago. So Diana, my team, she handles a lot of the messaging. She handles a lot of the cleaners, a lot of the issues that arise. But I did have an incident where I had a criminal in a unit who broke into the storage lockers of the building and stole a bike. The guy whose bike was stolen called the property manager, who then said, go on Facebook Marketplace right away. Went on Facebook, saw his bike there, went to the police, met the guy to buy it back. They charged the guy, but they couldn't hold him because they charged him for holding a stolen property, but they couldn't prove that he had stolen it. They had to build the case later on, and that's when I showed up and they took statements from everybody. But these things can happen, right? You have these problems where I do have to step in sometimes.
Would that trigger people to be upset, maybe have a vote, or a vote?
Well, interestingly enough, in the Emerson, I had a super successful Airbnb. It ran for 1.5 years. It was 355 days it was booked. And I had an adversarial council I was on the strata council. And they ultimately found out I was running it. But during that time, I actually had a stabbing happen. It's my worst situation I've ever had happen. Nothing was damaged, no one was killed or anything. But
Yeah, I hate that.
yeah.
Yeah.
So ironically, the strata manager kept her mouth shut as to which unit it was. I didn't even know for 24 hours that it was my unit. But nobody found out that was mine.
So that was in strata that did allow short-term rentals.
Well, no, it didn't allow it. It didn't have a restriction.
Okay,
In time when they caught me, they imposed a restriction. And that's when I learned, okay, I need to stack the council much better, which I've done.
So there's a risk that you could be.
Yes. Yeah.
So then you
What I did after they basically came after me, Stuart Ross was phenomenal. Firstly, the day of the stabbing, he came with me to meet the police at the property. So that was great having him there. And then,
He was the stabber or the stabby?
no, it was just the police. They seized my unit. Oh, no, he wasn't a lawyer. He was just,
So the stabber.
but when they found out and they came after me, they contacted the city because, of course, most cities don't permit Airbnb. So the city sent me a letter. Said, Stuart, what do I do? Because Stuart used to work for the city of Coquitlam. So he said, look, they just want you to comply. And so I had 6 more weeks of booking. So he said, we'll just send them a letter back, tell them you're going to comply. So 6 weeks later, I managed to get a tenant who wanted a furnished rental. So I got a guy for a year. And then after that year, I just moved the furniture out. So it is a risk for sure.
And so you just converted to a longer term.
Yeah. And rents
So
started to
worst case
skyrocket.
scenario is sell it.
Yeah.
And so you're a pet, right?
Yes.
So that's why Diane has all your stuff, because you can't spend.
Well, no, that's not why. It's just because I don't have the time. Diana is exceptional.
Sid got none of your flyers.
And I, you know, yeah, I mean, Sid is quite involved too, actually, in all fairness to Sid.
So I had a conversation with Josh about it. So I'm not sure if that's easy.
Maybe we'll say bye to.
Yeah, so we should invite everybody here
Yeah,
online.
say thanks for joining me.
Thanks for joining me. We're just off on individual questions here now.
Yeah, because I was free.